Hello and good morning, North America, good evening, Europe, and a warm welcome to our listeners from around the world. Welcome to this week's special Mining NL, Newfoundland and Labrador Mines and Money 5 at 5 show. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively, interactive format during the current situation. A few admin announcements before we start. To make the session as interactive as possible, please have your video switched on. To ask a question, you can either submit them via the chat function or raise your hand or virtually raise your hand in order to ask a question. We will also be having polling questions throughout the webinar where you can vote. For today's show, we have a great lineup of guests. They are John F. Kearney, Chairman and Chief Executive of Buchans Resources, Greg Andrews, President and CEO of Search Minerals, Matthew Manson, President and CEO of Maritime Gold, and Garett Macdonald, President and CEO of Maritime Resources. So let's start off with today's poll. First question up, do you have any mining interest in Newfoundland? Got a simple yes or no. It will give an idea as to how much conversion rate the sort of like 4 guests today will have to do to persuade you to go and invest into their various projects. And whilst we will go around and voting, let me turn to each of our guests in turn and ask them for their elevator pitch on why Newfoundland. Perhaps I can go to yourself first, Greg.
Why Newfoundland? Well, our experience there, it's such a safe and great jurisdiction to work with, right from the provincial governments and their departments, is they're so encouraging to seek that development to increase the mining activity. And it's part of their plans of going forward 2030 is to really engage the mining community.
Mm-hmm. And what would your answer be, Matthew?
Yeah, I mean, Newfoundland starts with the geology. It's got fantastic geology for gold exploration and development in our particular case, and it's also got the people that you need for a successful mining business. It's got people who are informed about mining, who are experienced in mining, and who are available to join you or to give you acceptability when it comes to communities. So it's got checks all the boxes.
Yeah, and for yourself, Garett, what's been the experience of Newfoundland for you?
Yeah, just like the other guys said, it's been a great jurisdiction to work in. We're finding the mineral potential is fantastic, and it's been really well prospected over the years, but not that well explored. So I think that there's nothing but upside there, and we're in a jurisdiction that wants mining. So it's been very good.
Yeah. And lastly, coming to yourself, John.
Very similar comments. I mean, I think from our point of view, it's the opportunity for what we describe as exceptional mines. I mean, they're still in elephant country in Labrador and certain parts of Newfoundland. So it's a geological opportunity in the background of a very positive environment, political, economic, and local environment.
Okay. Well, thank you very much for that. Perhaps we can just go and close down the poll, Elaine, and get the results of the poll up. So quite narrow, 52% yes and 48% no. Just before we go into the first presentation, we actually had the first question sent in by a member of the audience first, David Teskey. And David's question to the panelists is, this year has seen challenges for juniors to secure funding. I'm seeing plenty of offers tied to warrants, which just seem to dilute the value of the ownership later down the line. Would any of the miners on the panel care to respond to that, on what their sort of thoughts on that are, as to how they found financing during the last 12 months?
I'll take that. I mean, we've done a financing, and we did a financing with a warrant on it. We did one in September 2019 and then one again in May 2020. We're a project developer, so we're going to be raising capital to develop the mine. And our approach to those financings with those warrants, there were half warrants, were do we want to be within the time frame of the warrant, raising capital at that price with these shareholders? And in both cases, the answer was yes. Warrants are always at a premium to your current financing. So when you look at it in that perspective, it's a positive thing to do. If you're just putting a half warrant on to or a full warrant on to make a deal kind of, go that otherwise would have trouble going, then it's a different proposition. But if you've got a specific financing plan, an outlook, and that perspective on it, then yeah, we did a flow through deal last week that had no warrant on it. It was a different calculation. So horses for courses.
Mm-hmm. And you just mentioned flow through financing there. What's the current, because often when I read about sort of like Canadian junior mine financing, you often get the sentence often comes up that Canada is still very reliant on flow through financing. Is that still as true in 2020 as it has been in other years?
Yeah, I can answer that. I mean, flow through financing is a great incentive for the Canadian investor. It's a sort of a tax-driven incentive, but it does encourage investments into your companies at the exploration stage and some other opportunities in your development. So for us, we've used flow-through funding, and it's been very well received.
Okay. Thank you very much for that. So without further ado, let's move on to our first mining update, which is from Buchans Resources. Buchans Resources is a Canadian mining exploration company engaged in zinc-led exploration development in Newfoundland, Canada, and nickel, copper, cobalt exploration in Labrador, and gold exploration in Newfoundland and Labrador. Buchans also has an investment in silver projects in Mexico through its 22% interest in ownership of Exterra Inc. and in zinc exploration in Ireland through its subsidiary Minco Exploration PLC. In early 2020, it spun out its Canadian Manganese Corporation, its battery manganese project in New Brunswick, to its shareholders. John Kearney is their chairman and chief executive. Over to you, John.
Thank you, Andrew. At Buchans Resources, we like to describe ourselves as an exploration and development company focused on districts with exceptional opportunity for the discovery of world-class mines. We're involved in exploration and development of base metals in the world-class Buchans VMS camp. We are involved in the exploration for nickel and copper in Labrador in the area of the Voisey's Bay world-class mine. And we're also exploring for gold in central Newfoundland and in Labrador. Now, the first reaction of many people is to say, you're too diversified. You're looking for base metals, you're looking for gold, and you're looking for nickel, cobalt. And our answer to that is no, we're not too diversified, because we're actually focused in the same area. We're focused in Newfoundland and Labrador, where we have a very experienced management team and geological team that have an in-depth knowledge of the geology of Newfoundland and Labrador. And we have the experience of the political environment, the government environment, the regulatory environment, and with the operating environment. So we are very focused, and that focus is in Newfoundland and Labrador. In our flagship project, the Buchans VMS camp, here is historically one of the highest grade VMS camps in the world, where a Sarco mined over 15 million tons at a combined grade of over 20% combined zinc and lead. And here in the camp, we have two different strategies. The first is a bulk tonnage stockwork mineralization potential open pit mine, which was left behind from the previous underground operation. In 2019, we published a new 43-101 resource on that, and we're now moving to do an updated PEA or a revised feasibility study, updated feasibility study. In Newfoundland, we've got in Labrador, we've got two nickel, copper, cobalt projects right near to Voisey's Bay mine. In fact, one of the properties is completely surrounded by the Palais licenses, and it's only 5 kilometers south of the existing Voisey's Bay mine. And finally, back in Newfoundland, we are exploring for gold in central Newfoundland, and suffice to say that we've got exploration properties both to the west and to the northeast of Maritime. And I'm sure later in this presentation we'll hear from Maritime about their gold projects we're hanging on both ends of them and watching their developments with great interest.
Okay, thank you very much for that. For Buchans resources, what milestones can investors expect in 2021?
Well, perhaps our main milestone that we're working towards is to relist the company. At the moment, the company is not actually listed, even though it is a reporting issuer in all the provinces and has a fully compliant with everything. But we are planning to relist it on the Toronto Stock Exchange, hopefully early in the year. And that's probably the main milestone that investors are looking for. But we will have an active program exploring in Labrador for gold and nickel. And of course, we will be continuing our work in the Buchans camp, where we have relogged over 135,000 meters 135,000 drill holes, which is a huge effort, and I think demonstrates our focus.
Sure. There's a question sent in from the audience from Peter Bell. I'm going to just pose it to you. It's more of a general question rather than specifically focused about Buchans resources. But Peter's asking about the JEA, the Junior Exploration Assistance Funding Programs. Do you have any sort of like views on that? And can you kind of like tell Peter as to what they're about and how they operate?
Well, this is a program that's operated by the government of Newfoundland, whereby they contribute a certain amount to qualifying projects. I think the most important part about this program is that it first of all demonstrates the interest and commitment of the government of Newfoundland and Labrador to the exploration sector, to the junior exploration sector. It demonstrates the importance that the government places on this. And for many very small projects or small companies, it is a very useful program because it supplements the money that the company itself invests. So as an incentive for exploration, it's an excellent program, and it's spread around among the projects that qualify. And it's a very good project. But the most important thing, I think, is that it demonstrates the involvement and commitment and support of the government.
Mm-hmm. Changing sort of tack slightly, I know that this show is mainly obviously about mining NL, but I'm just curious as to sort of like pop in a couple of questions about some of your other sort of projects. Can you tell us a bit about your manganese projects in New Brunswick and also Minco's exploration projects in Ireland?
Sure. Well, as we mentioned in the introduction earlier this year, we spun out our manganese project in New Brunswick, specifically to give our shareholders the opportunity to focus on battery metals. Our project in New Brunswick is it's owned by exactly the same shareholders that own the shares in Buchans. And it is we call it a battery material because it is a manganese carbonate, and it has the ability to produce manganese at a grade of 99.9%, which is the grade that is necessary for the battery industry. We believe our Woodstock project in New Brunswick is the largest undeveloped manganese carbonate project in North America, and one of the largest in the world. We did a PA on it about 5 years ago, and we plan to update that this year. So it's a very, very interesting project. It's a big project, but it is the possibility of participating in the battery metal space. On Ireland, we have an investment in Minco Exploration. Again, we spun that out earlier this year. And here we are exploring for lead and zinc. Our joint venture partner is Boliden, which operates the largest zinc mine in Ireland, in Europe, which is at Navan. And our licenses are immediately adjacent to the Boliden Tara mine, and we are in joint venture with Boliden on those licenses. So if you like back to our roots, where zinc-lead exploration in Ireland, and for those who may not know, Ireland is the largest producer of zinc in Europe.
Mm-hmm. What about the legacy environmental liabilities from brownfield projects like the Buchans mine? Are there any particular challenges regarding that?
No, actually not. I mean, we see the legacy as being a benefit because it's a brownfield site. The town of Buchans and the area around it was built as a mining town. It has all the infrastructure that we would need. It's got roads, highway roads directly into town. It's got power. It's got accommodation. Yes, there are old tailings ponds there, but they're well maintained. So there are no serious legacy problems. In fact, as I said, we see the fact that it's a brownfield site in an area that's already been developed as an industrial site is a positive. And the tailings ponds are well maintained, so there are no issues there at all. It's a benefit.
Okay, and just one last question. Any talk of bulk sampling or toll milling of material from Buchans as an exploration angle?
Well, this is something we have looked at, not so much toll milling, but we have looked at a central mill, because in the central Newfoundland area, we also hold about 3 or 4 5 deposits, small deposits, all of which have 43-101 resources on them. And each individual one alone is not enough to make a mine, but central milling is something that we have looked at. We have done metallurgical studies, in fact, supported by government financial assistance, and we have demonstrated that the ore from a number of these deposits can be commingled in the same mill. So I don't think it's toll milling, but I think it is the possibility of a central milling facility to try to service the numerous small deposits that are in the central Newfoundland area.
Okay, thank you very much for that. If anyone has any more questions for John, please feel free to post them into the chat box at the bottom of your screen, and John will get around to answering them. But we'll now move on to our next project update, which is Marathon Gold. Marathon Gold is a high-quality, growth-oriented gold development company, advancing its 100% owned Valentine Gold project through to production in the central region of Newfoundland and Labrador. Matt Manson is their president and CEO. Over to you, Matt.
Thanks, Andrew. So I'm going to take you through 3 slides here on Marathon Gold and the Valentine Gold Project. So we're located central Newfoundland region, and I put on a geological map there of the province of Newfoundland. I mean, there's been a lot of exploration activity, especially in the last 12 months in Newfoundland, gold focused. There's a lot of activity going on, a lot of very newsworthy and noteworthy results from multiple gold companies. Valentine's been in the province for about 9 to 10 years and has built a big resource, 4 million ounces. It's the largest undeveloped gold resource in Atlantic Canada. And we're now taking this through to mining. So there was working off a PFS that came out last year. We're looking at a 12-year mine life, but 175,000 ounces a year for the first 9 years. And it's got a healthy economic profile, 472 million Canadian NAV, and a 36% rate of return at $1,350 gold. So this is something that Marathon will develop, $272 million initial capital, good cost profile. And we're very committed to that. So we're in the middle of an environmental assessment process. We filed our EIS about 2 months ago. It's been accepted and it's in the formal review process. We're in public consultations for that. We started our feasibility study back in August, so we're building the team to do this. And the schedule is to have groundbreaking in the beginning of 2022, assuming release from the environmental assessment process next year, and then first gold production in 2023. In parallel to that project development effort, we're still very focused on exploration, and it's there that we've been having quite a lot of success in the last year. And Elaine, if you can go on to the next slide. This is a Verify image. You can go onto our website and you can kind of tour around our data if you like using the Verify software, but this is a snapshot from that. We've got 2 ore bodies, Leprechaun and Marathon, that contain most of the resource, about 1.3 million ounces, all categories on the left at Leprechaun, about 2.5 million ounces on the right in Marathon. Average grade in the resource is about 1.75, 1.8 grams per ton. So that's what we're taking to mining. And we always talk about the simplicity of this project in terms of its situation. You know, this project's not the top of a mountain. It's not in the high Arctic. It's not in a desert with no water. It's on crown land in the middle of Newfoundland with road access currently and a power station 30 kilometers away. So again, you know, one of the attributes of working in Newfoundland is this type of situation. The exploration is in this year. We've spent about $10 million and drilled about 52,000 meters focused on this 6-kilometer interval in between the two principal ore bodies. And most particularly, we've been having success in what we call the Berry zone. And you see the top view and the bottom view. The drilling there is showing you the yellow are 1 meter intercepts grading above our resource cutoff of 0.3. But we've been getting some, 3.3 over 120 meters, 2.6 over 85, 1.47 over 111. We've been having these long intersections throughout the year as we drill into another area of concentrated mineralization. So Berry's been quite exciting for us. We've put the pin on the wall on the resources in the 2 open pits. That's what we're taking to mining. Berry's about the future, but still a lot of news flow to come out on this. There's drill results stacked up still to come out through to January, and we'd expect to have our first resource on that area end of the first quarter next year. So this is a project that's still growing. And Elaine, if you can go to the last slide. Quick snapshot on the balance sheet and the capital structure. So the market cap's about 600 million. 283 was the closing price on the 7th of December. A couple of recent financings. The most recent one was some flow through we did last week with Pierre Lassonde, who came in for most of that. 11 sell-side analysts covering us targets of 275 to 575. And a good position, good treasury, $52 million Canadian. And as I was saying earlier on, we've got these warrants, average price 177. So that's another about $33 million of proceeds. So that's a very strong cash position to do everything we have to do next year as a development company: feasibility, permitting, early works, long lead procurement, detailed design, with a view to having a construction decision by the end of next year. And Andrew, that's my elevator pitch.
Okay, thank you very much for that. Can you perhaps you can you just say a little bit more about the latest Berry drill results, and also I guess the assay results along the Sprite corridor?
Yeah, so Berry, was an area that within that 6-kilometer Sprite corridor that lit up really at the end of last year. There was one hole in there historically from 2018 that had been pretty good. Went there at the end of last year, and it's been growing ever since. So we now think it's about 1.5 kilometers of strike extent. There was a technical session that we had a few weeks ago, and you can go onto our website, you can replay that, where we had a deeper dive into the geology of it. But we're getting the deposit model for this, for Valentine, are these extensional veins that are centimeter to meter scale, and they're in the hanging wall of a large shear zone. And there are certain areas along the 20 kilometers of strike extension of this project where they've become densified into what we call main zones. Think of a Venetian blind with the blades of the blind being the individual veins. And so there are the Leprechaun and the Maritime deposits are both main zone concentrations of this veining and mineralization. Berry looks like it's another one. So we're seeing long intersections as we drill across the blades of the Venetian blind. And we're also drilling the other way to get both dimensions. So it's got all the geological attributes and the gold assay attributes that we would look for. So very happy with how it's progressing. So there's a lot of fun with names here in this project. But Berry is within the Sprite zone, which is between the two deposits, and Berry is now growing and becoming the main focus of interest.
Question from the audience about can you please give us a bit more information about the discoveries undercover at Valentine? And do you think that these existing deposits that haven't been discovered? Oh, sorry, I'm just reading the question. So I'll start the question again. Can I ask about the discoveries undercover at Valentine, and is there potential for more discoveries undercover along the strike?
Certainly, lots of potential. The 20 kilometers of strike extent it captures the right geology. So we've got these brittle granitoid rocks on the north or hanging wall side of this big shear zone, and those rocks have deformed brittly, allowing this veining to develop. So the whole 20 kilometers is prospective. The cover is glacial till with 3 to 5 meters. It's quite thin. The geology, the exploration here has been quite traditional. It's been 9 years of prospecting. The initial showings of Leprechaun were actually exposed in a pond on outcrop, and then trenching, drilling below the trenches, having success and stepping out with the drilling. So geophysics hasn't really been used so much. to vector here. It's been a lot of traditional, trenching, prospecting, drilling, and doing a little bit more. So that's been very successful. And I think now we're getting our eye into, with even more kind of detail as to exactly what is causing these areas of densified mineralization to form. And there seems to be some measure of periodicity developing here. But yeah, I mean, I think exploration for us is going to be a continuing focus because there's so much potential along that 20 kilometers.
And just a bit of a follow-up on that. What about ultra high grade? Is there a high grade deposit hiding in a bulk tonnage scenario here?
Well, I think this is where we differ really a little bit from the tradition of the Newfoundland gold deposit, which tend to be narrower and higher grade things. We're going for the bulked up deposit here, right? So we're going for the bigger scale thing. I think we have, individual vein packages that can give you very high grades. We haven't really been so interested in chasing those. We're looking for that big bulk deposit. I'm often asked about an underground mine here, underground potential. We're deliberately sort of pushing that off to the future. There's a lot of surface ore that we can open pit for a very long time before we have to think about going underground. But I think, if and when we go underground, I think then our focus becomes more about, grade and areas of high grade and what's causing, areas of high grade or chasing narrower things. But right now, we see this as a big bulk tonnage, open pit, 175,000 ounces a year, getting up to 4 million tons a year processing, a big scale, truck and shovel drill and blast operation. And that's going to be somewhat new, I think, for Newfoundland, for gold mining in particular, that scale of operation.
Sure. Let's got one last question for you, but before I ask that question, because it actually links into our second poll, if I can perhaps ask Elaine to get up our second poll of today's 5 at 5, which is what highs do you expect the price of gold to reach in 2021? Obviously, just curious to see as to what you think, Matt. What would your answer be and why?
So I'm gonna, I really enjoy not having to be a pundit about the gold price. And in the gold business, I had many years in the diamond mining business where I had to have a view on the diamond price, but everybody in the gold business has a view on the gold price. I don't have to tell you mine. I'm obviously optimistic, but as a developer, I can tell you that our project works at like $1,180 per ounce, right? We get an investable rate of return right down there. So where we are right now gives us lots and lots of margin on this project, makes it very robust. If you think gold price is going higher, then you got even more value in a gold mining stock. So get in. But Andrew, I'm sorry, I'm gonna pass on the question. I don't want to be a pundit.
No, that's absolutely fine. You're kind of welcome to take the Sixth Amendment and sort of like not answer and leave it up to our audience. And actually, to be honest, it looks as if our audience are fairly evenly split. So less than $2,000 an ounce was 35%, 2,200 to 2,200 was 35%, and 2,200 to 2,400 was 27%. So the good news is obviously that Marathon Gold is going to be a really great project to go and invest in, whatever the price of gold is in 2021. So thank you very much for that, Matt. And let's go and take down the poll and move on to our next company, which is Maritime Resources with its Hammerdown Gold Project. Based in the Garett mining district of Newfoundland and Labrador, Maritime is looking at a restart of the former high-grade Hammerdown gold mine and is exploring a number of new high-grade gold and silver targets in the area. Garett Macdonald is Maritime's president and CEO. I guess, Garett, how would you have voted? And then perhaps you can give us an update on your project.
Yeah, thanks, Andrew. I think the voting probably reflects my opinion. I think, like Matt, we're happy. Anything above 1,100 makes a good result for our project. So from here on in, it's open. So I'm hopeful for something north of 2,000, but it's not needed for our project to work really well. So. But thanks. I'll give you a little update on our company and our project. So we can move on to the next slide there. Okay. So some of the key takeaways for our company. Our key asset is the Hammerdown Gold Project. So this was former high-grade operating mine. that ran in the early 2000s, operated by Richmont, very high grade deposit, 16 grams per ton average head grade when it was operating, and it had a very high cutoff grade of over 8 grams. And this is a mine that operated at $300 per ounce back in the early 2000s. So there's a lot of exploration upside outside of what they mined. So we're sitting currently with about a 1 million ounce resource. That's really interesting. We think there's upside from here, of course, and we're doing a lot of exploration right now around the old mine workings. We've been really interested in coming up with a restart plan for Hammerdown. This is our company's business plan, is to look for a high margin, low capital starter project here with strong economics. And in early March, we came out with a new PEA study for the project that looked at a combination of open pit and underground mining, which is a little bit different than what was here originally. And we found that. We found a very good project here with great economics, so roughly a $200 million project at $16.50 per ounce. This will give us around 70,000 ounces a year as a startup operation, which is a good start. We eventually would like to get up to 100,000 ounces a year as a company. So that was great and gave us the confidence to move into further studies to de-risk the project. We are starting the feasibility study now, and we are in the permitting process as well. I should mention as well that we are very interested in the exploration story and around the mine site, but also a very exciting new project we have just located a few kilometers away from Hammerdown called Whisker Valley. So over there, we're finding veins, high-grade veins that look a lot like Hammerdown. And we recently hit a new intersection, 5 grams over 5.8 meters there, which I'll explain in a second. So throughout 2021, it'll be definitely a big focus on exploration again, similar to what it was this year. But this year was really about defining the project. So we did a lot of infill drilling, but I think next year is going to be focused more on stepping out from what we know to find new ounces that we can put into the mine plan. We're well funded with over $7 million in working capital, and major shareholders include Dundee Goodman, 1832, and Sprott. Next slide, please. So just a quick snapshot of our PEA study. And what we see here on the graph, ounces per year and the grade that we would see at the mill. So we are looking at using ore sorting. We've done a lot of test work on it, and this kind of a deposit is very amenable to X-ray and optical sorting. So we're looking for sulfides, pyrite, where the gold is associated, and we can reject quite a bit of the dilution that will come along with these narrow veins. So total run-of-mine diluted feed was 4.4 million tons of 4 grams. That gave us over 500,000 ounces of gold recovered over the life of the mine, and the initial capital cost of around 57 million Canadian. So this is exactly what we were looking for as a low capital, high margin starter project. And our base case here for the project was at $13.75 an ounce, and we had great result. And from here on, we're looking at ways to add to the economics and zero in on the detail as we jump into the feasibility study stage. All right, next slide. So little discussion on Whisker Valley. I wanted to make sure we touched on this one. So like Matt's company, we have a development project that we're working hard on. We'll continue working on it through next year with feasibility and permitting work. But of course, we're interested in the exploration side of the thing here too. So we've been finding a lot of new mineralization here at Whisker Valley. This is the new project that we have just northwest of Hammerdown. So as you can see here, I've kind of shown 6 images just to give you an example of the different veins we've been seeing. The top 3 are on the west side of Whisker Valley. This is a kind of a north-south trending valley, about 1.5 kilometers wide. And we've done a lot of trenching, just started doing quite a bit of diamond drilling here too. And we're seeing these high-grade narrow veins with gold, silver, and base metals on either side of this valley in bedrock. So for the longest time, we were finding high-grade boulders and doing a lot of trenching, and seeing this opening up now is very, very interesting. This does have a lot more copper than we would have at Hammerdown, so it could be something a little bit different. But next slide, let's have a look at Whisker Valley. So this really sets it up well. So we're looking east at the valley. What I've kind of dashed in here or shown are these red dashed lines. This is essentially the magnetic low and high contact. And where we are finding these high-grade veins in bedrock now on both the east and the west side of the valley. So here you can see on the Garett vein on the west side, with some high-grade gold, silver, and copper values across a number of different veins. And just this summer as well, finding them again on the east side of the valley. And in between here, throughout last year's prospecting work and this year's as well, we're finding, sharp, angular, large boulders of quartz with pyrite, chalcopyrite, some high-grade gold, silver, and copper. And I think it's significant to mention that we drilled a hole just recently. It was announced, I think, a few weeks ago, down at 150 meters, right in the middle of the valley, intersected a new zone, 5.8 meters wide, grading over 5 grams. So very interesting here. We've got a few more holes on either side, above and below this intersection, to hopefully firm up what we think could be a new zone developing here at Whisker Valley. And that's interesting for us. It's close to Hammerdown. It's near the highway as well that goes up to Bay Vert, and it could be a new source of mineralization that could feed into the mine plan. So very excited about this. I think that's about it for the pitch. Maritime has been very active, on the development side and the exploration. So I think 2021 we'll see a lot more of that, and it'll be definitely an exciting year to come.
Thank you very much for that. You mentioned you're a highway there. What's the infrastructure like there?
Yeah, the infrastructure around the area is fantastic. This is the Bay Vert mining district. So we've got the Trans-Canada Highway going very close to Hammerdown. There's the Bay Vert Highway up to the north, road access to all of our properties. Hammerdown is a brownfield site. So we've got infrastructure in there, kilometer away from the power line. We've got local labor, suppliers, everything that we need. So it's a great setup.
And what are your key milestones going into 2021? Is it to go and sort of like develop and explore Whisker Valley more, or what are sort of like milestones have you got on your horizon?
Well, from the project side with Hammerdown, as I mentioned, so we are in the permitting phase here now. So as a milestone for us, we'd like to get through project permitting next year. Also like to get through the feasibility study to be at a point where we can make a project decision, and arrange the project financing. So that's for the project itself. The exploration milestones, I would think that, like I mentioned, up to 20,000 meters of drilling is what we plan for next year. I think that the bulk of that will definitely be trying to add additional ounces to our mine plan. So there's a lot of brownfields exploration, I guess you could call it. But as well, we want to keep an eye on Whisker Valley, because that does look like something that pretty exciting that we're starting to open up.
Do you have any sort of like targets, sort of like timelines on when you want the Hammerdown Gold Project to enter production, or is it sort of too hard to really place sort of a prediction on that?
No, I kind of think it's in the first half of 2022, right? I mean, we are talking about a restart of a former mine, so there's definitely potential to restart that one. More work to do throughout the feasibility study next year, but I think all that could be wrapped up, say, in the third or fourth quarter of next year, and be in a position to make a call to build the mine. And then I think it's a fairly quick construction period from there. So I would say in the first half of 2022 is what we're looking at.
Mm-hmm. And just looking at your investor base, obviously you've got 3 fantastic investors there. You mentioned Sprott, you mentioned Dundee Merchant Partners, and you mentioned 1832 Stroke Dynamic. In terms of expanding your investor base, I mean, have you been trying to sort of reach out and expand your investor base, I guess, beyond sort of like North America to sort of like European-based investors or investors from other parts of the world, or still your main shareholder is still North American-based?
At the moment, Andrew, mostly North American-based, although we do quite a bit of marketing throughout Europe. So I think that we're wide open to ideas, of course. So. But on our last financing that we did back in August, we did bring some more institutions in from the U.S. And we'll see how it goes throughout 2021. But we do a lot of marketing throughout Europe. Did I think 30 or so meetings last week and some conferences. So we'll look at that in the new year. But we're certainly open to ideas.
And this probably leads into question, I guess, for all 4 mining companies. Is I'm just kind of like wondering is that. A couple of years ago, when it came to North American investors, there was often this sort of narrative that North American investors were turning away from mining stocks and they were going into things such as cryptocurrencies and going into stocks such as cannabis. Have you seen in the last few years a real sort of turnaround with kind of like North American investors coming back to mining? I mean, maybe to yourself, I'll ask the question to yourself first, Garett.
I think I've seen it more in the last year than I have before. So I think it's starting to come back now. Gold price driven, of course, that the investors that come back, jurisdictions at the top of the list of their concerns. And I think that's why Newfoundland and Labrador is getting a lot of attention recently. Quality mineral deposits in a jurisdiction that's that you can work with, and a very practical place to be. So yeah, I've seen more of it lately.
Okay, I'm just curious whether either John, Matt, or Greg has a comment on that.
Well, in our case, we have a fairly large shareholder base in the UK and in Ireland from our historic register. But we have seen an increase in interest in Canada as the cannabis stocks rolled over, and some of the money was taken off the table from the cannabis era. And a lot of that has come back, or some of that has come back into the mining space this year, particularly on the gold side. But we see London also being, an increased level of interest, again, primarily at the retail side. So I think there is a general move back into the mining exploration area, primarily driven by gold, but also with the improved prices of almost all metals now. Copper is at a $3.50, and zinc is back up to 125, 130. So there's renewed interest in the space, primarily because of gold, but also because of commodity price.
And I think you've seen it not just at the retail level, Andrew, as people move away from cryptos and cannabis. You've also seen it at the institutional level, where it took a little bit longer to develop this year, but there's now kind of more inflows into your longer precious metals funds, and they've had a fantastic year. So at the institutional level and at the retail level, there's much more investment appetite for mining. Again, led by gold, as it traditionally often is.
Yeah, and I would comment, being a rare earth company, we're usually the last to get the trickle-down effect, but with the macro world of the EV mobility, we're actually starting to get nice attraction into our sector of the rare earths with what's happening in the macro developments.
Thank you very much for that. And I think that kind of neatly leads into our final project. So staying with Greg, our final project is Search Minerals. Search Minerals controls a rapidly emerging critical rare earth element district in southeast Labrador that is road accessible and on tidewater. Greg Andrews, who just heard from there, is their president and CEO. Over to you, Greg.
Thank you, Andrew. And yeah, we start off saying that we're more than a mining company, as we've learned we needed our technology to be able to work with our resource. But first off, we just sort of talk about what are rare earths, and we just move to the next slide. If you like, go through the statements there. So I have one slide, and I'm just going to touch about all those, and really what are rare earths and what are we looking for? We're looking for the permanent magnet is the elements that make up the permanent magnets, which are high strength magnets. And those four elements consist of neodymium, praseodymium, dysprosium, and terbium. And they also make up the global value of the rare earth industry. So we're blessed with our deposit to have those elements in our deposit. It represents over 85% of our revenue. It represents 20% of our resource. So it's a very nice resource to be able to work with. And as we look to see what are those permanent magnets used for, what is fueling this macro world, I need to talk about the macro development of rare earths. Unlike gold companies, they don't need to know all the supply chain of where they're going to sell the product, but we do. And we look at our supply chain in the rare earths. It's very complex, and it's really driven by what we're looking at is a demand pull sort of supply chain, whereby led by automakers and their recent commitments of developing their electric vehicles, which is very disruptive technologies as they're going to move forward. And so we look at a demand pull, meaning that the car companies, manufacturers will be looking at their traction motor suppliers and making sure that they have reliable resource to be able to make the magnets that go into those motors, and all the way down that supply chain, from the magnets to the alloys to the metals to the separation of mining. And the question will be, and where those rare earths raw materials coming from, and we wanted to be able to say search minerals in Southeast Labrador, so they have a supply secure amount of product to continue and make sure their supply chain is not disrupted by any geopolitical risk or supply risk. So when we talk about search minerals, how are we going to help create and make this supply chain valuable for these for the growing rare earth supply chain? There's a lot of recent government intervention and initiatives with the EU Commission and USA, with Canada, all these collaborative efforts to really look at the supply chain as it's being tested and will be tested with the expected demand growth in the expectations of electric mobility as one example. So how does Search fit in? Well, we have a resource. We are district scale opportunity at 63 kilometers long. We have great infrastructure. We're right on Tidewater. We have the Trans-Labrador Highway that runs through our property. We have a little airstrip there. We work around 3 communities. It's right in St. Louis, Labrador, and Port Hope Simpson, Mary's Harbor. And we started this business in 2010. We got into the rare earth industry when the prices were crazy. And out of that, we do have 2 resources, one called Foxtrot, which was a 14-year life mine. And we recently drilled our Deep Fox, which we posted our resource estimates on that last year. And the importance of drilling Deep Fox was to increase the mine life. And so we'll be updating our PEA on our Foxtrot and Deep Fox so that we can show it's a multi-generational play, increasing the production rates from 1,000 tons per day to over 2,000 tons per day, and making it a very robust PEA that we expect to have. We continue to do exploration work along the district, and down 63 kilometers away, another property called Fox Meadows, which is, again, we're doing extensive channel sampling before we'll do a drill program. This is led by Dr. Randy Miller and Suzanne Butler, who've been with us since day one. They've walked that complete district. It's a volcanic belt, and Randy knows the geological model. The example of Foxtrot, we spent over $6 million trying to find the resource, which we did find, of course. And then the Deep Fox, we were able to drill our 24 holes for $1 million, and with every hole hitting, because Randy understands the geological model there. So that's very, very positive to work with that. The next step that you need, having the resource is one thing, you need to be able to process it. So again, back in 2010, we did a bench scale testing on our resource to make sure that we could take the ore into the process. So we did a bench scale, which is led by Dr. David Dreisinger, the head of UBC Metallurgy. And what we were working on is we needed to make sure that we were low cost, scalable. So the typical flow sheet Dave was looking at, and halfway through our processing, he decided to just do a direct extraction on it, whereby he just hit the ore with some sulfuric acid and some low heat, 180 degrees Celsius, which, as Dave explains, is what you would bake chocolate chip cookies with. And what his technology did, which we have patented, it's Search's patented technology. It reduces 4 typical processes out of a flow sheet, which drives down those capital costs and operating costs. And those processes being grinding, flotation, magnetic, and gravity separation. So from that success of the bench scale, we've completed now 2 pilot plants operations. We've produced a high purity mixed rare earth oxide concentrate and carbonate. These have been funded with the support from both ACOA and Department of Newfoundland government, which is greatly appreciated as we move through to the next step. So being able to have the product now at pilot plant, our next step is to build a demonstration plant at our mine site, and that will be our goal for 2021, that we'll be starting to look at that. But again, once again, you have your concentrate, you now need to separate it and refine it. So we need to, this year we signed 2 MOUs with one with Saskatchewan Research Council and one with a US company called USA Rare Earths. And both of those, Saskatchewan Research Council in particular, is investing $31 million to create a rare earth facility in Saskatoon. And they'll be building a 500-ton per year separation facility piece that Search can utilize with the product from our demonstration plant and pilot plant to be able to test to get to an oxide level that we can then share and start testing in the sales channels to develop offtake agreements and strategic partners. So those are the 4 pillars of the rare earth company that we are. From the resource processing, separating, and sales, we have to learn a lot of things. All those pillars are necessary to get the fundings for the next for our continued success.
Okay, thank you very much. Oh, sorry. Yes, if I can just start the ball rolling with it, was just a sort of general question: is why rare earths now? There was obviously a big rare earth boom and bust in 2010 to 2011. So, for an investor thinking about investing into search minerals, what would you say to them that's different in 2020?
Yeah, really, the difference back in 2010, there wasn't really the support mechanism of the expected growth. What's happened? We were talking about really the supply constraint, and it was really just making cellular phones and computers and whatnot. In 2020, there's actually the commitments by the automakers of spending billions of dollars, and also the government-led initiatives to electrify. A recent report, as an example, in the EU Commission, they're talking about zero-emission vehicles by the year 2030. Well, to do that, they're going to need permanent magnets in the traction motors, along with the batteries and all the other commodities that are needed to hit those government-led goals that they're trying to achieve. So just in permanent magnets alone of last year, there was probably 2.6 thousand tons of permanent magnet material for 4.4 million cars, and they're expecting 30 million cars by 2030, which would increase that 5-fold of what they would need. And so mines need to be in production, get in production, and it's not going to be a race of picking one rare earth company. We need multiple resources to be able to feed this demand that is expected in these coming years.
Yeah. And when you talk about the demand, what are the demand protections what are the demand projections that you are predicting for rare earths over, say, the next 5 to 10 years?
Well, again, just with the example of the permanent magnets that they were talking about, if they needed 30 million EV cars in the EU alone, that would require almost 16,000 tons of material. Last year, they only consumed under 3,000 tons of material. So that's the growth expectancies of just in the permanent magnets of traction motors in just the EV market. There's other uses of permanent magnets. The wind turbines use permanent magnets. The defense uses permanent magnets. Continued growth of consumer electronics. I mean, the permanent magnets are deemed like the vitamins of technology as we continue to develop from robots and everything else. There's going to be untold demands apart from just the EVs that we can look at.
Yeah, and presumably one of the advantages you've got is that once you get outside of China, there aren't that many rare earth mining companies around. So presumably that's one of your unique selling points. There's obviously Linus and there's a few others, but I mean, how many rare earth companies are there in Canada at the moment?
Oh, there's 5 or 6 sort of really at different stages of development in Canada alone, but really North America, not really much other than the MP materials and what they have, and over in Europe too. So each of these countries are looking to make sure that they have a reliable source of raw materials if they're going to be able to bring that economic growth of the EV market, just as an example, to their countries to be able to build. They don't want to be just an assembly of finished products being made out of Asia.
Mm-hmm. Okay, and then just swinging away from rare earths, because that's more of like a generic question to you, and then bringing in the other panelists as well, is in terms of the London Stock Exchange and AIM, to what extent is that of interest to yourself as a possible place for a secondary listing in the future?
Yeah, currently we're just listed on the TSX Venture. Our shareholdings and being in the rare earth space is, the headwinds have been really against us since 2013, and it's really been only, I'm going to say, in the last few months, really, as more and more knowledge of EVs and the commitments from the government-led initiatives have really started having other investors look at the rare earth space, which they haven't really been looking at before. So listings in London, London's obviously a jurisdiction that understands mining and the exchange. So we'll be looking at all those avenues to attract new capital, especially down in the U.S. and London and Asia, and increasing our shareholder base from really a friends and family to more growth. And
John, what's your outlook on looking at sort of secondary listings for Buchans Resources?
I'm afraid I'm a little bit of a contrarian there, because we have been in both markets in the past, and what we find is that the regulations and the rules are not very compatible. If, for example, a Canadian company that wants to list on AIM, you then have to move through the whole nomad system and all of the regulatory processes that involves. We're going the other way. That's why we spun out Minco. We plan to list that on AIM and Euronext, and not in Canada. We find that the investors in London are primarily sophisticated enough to be happy to trade on the Toronto Exchange. And we find that the investors in Canada like projects in Canada. So for the smaller companies, I certainly have moved away from the multiple listing. And I know that Yamana, for example, is now listing on the London Stock Exchange, and Gibraltar is also doing it. But I think you need to be a large market cap to take advantage of a main board listing on London. So my view is actually no, it doesn't work, and it creates, in my view, it creates a bit of a regulatory quagmire that it takes quite a bit of time to manage both of them. Now, others have tried it successfully, but my view is it's horses for courses and keep close to home.
Okay. What's your view, Garett?
Yeah, I think I agree with John on that one. I think it's it's a small company, which we are. We're focused on less regulation and or less complexity than more. So I think that we're happy with where we are, and if we are growing and we're in production and we're looking at other things from there, then perhaps we consider it. But at the moment, I think we'll stick with exactly where we are.
And just finally turning to Matt.
We looked at, we've looked at a main board listing in London to target those specific, that pool of capital that's mandated to look at London listed, resource companies, and there's been not that much of a choice there recently. But I think like the others, we feel like people are quite able to come onto the TSX main boards mostly, and if you get a listing in London, whether it's AIM or main board, you got to support that. You've got to visit, you've got to market, there's the back office, there's the regulatory thing. Unless you can fully commit to it, it ends up just being, something that becomes illiquid or something that cannibalizes your trading on the TSX. So some companies like Yamana's done a main board listing there quite recently, and we'll have a success with it, I'm sure. But for us, as the others have said, it doesn't make so much sense right now.
Okay. Thank you very much for that, Matt, and thank you very much to our panelists for today. So once again, a warm thank you to Buchans Resources, to Maritime Resources, to Search Minerals, and to Marathon Gold. Also, a huge thank you to Mining NL for being the sponsors of this show, and also a huge thank you to the Resource Global Network, who've been supporting all of our 5 at 5 events throughout 2020. This is now our last show for 2020. We'll be starting again on the 14th of January next year. So in the meantime, a warm sort of like a thank you to you all, a Merry Christmas, and I'll see you all in 2021. Thank you very much.